Hello, so this is part 2 of my GameStop video. If you haven't watched the first part, make sure you do, because that's the pros on why you could invest in GameStop. In this video, I'm going to go over the negatives of why you shouldn't invest in GameStop. So stay tuned to find out. Hello and welcome, I'm Wayne from WES Investments, bringing you stock market news, portfolio updates and training on how to make money in the market, all on this channel. So if you're new here, consider subscribing, and if you are interested in further education regarding the stock market, then check out the description below for my other options that are available, including my Patreon link. Now the boring bits first, I am not a financial professional, this is not financial advice. Please do not take financial advice from someone on YouTube. Make your own decisions and only invest in companies that you feel comfortable investing in. So, talking about GameStop and why not to invest. So first of all, in the last video, I did say about them going bankrupt. They have good cash reserves, so they should be okay for the short term. But if they keep losing money like they are, those reserves are not going to last long. There is also the significant short interest, which means a lot of people are expecting this company to fail. While there are some big names that are supporting this company, there is a lot of people out there that are betting against it. We then have another confusing figure, which is the significant growth of the e-commerce sector of this business during the pandemic. While we would expect a lot of growth in this area, what it shows to me is that the business has not reached its full potential before and then suddenly realised that it could be making more money and started to scramble in this direction. This could have been a huge potential opportunity here for GameStop, but I think they were so late to the game that they've not really been able to fully capitalise it. Something else GameStop appears to be doing is something like this.
I don't care about the money, I just want it all gone. Everyone, all items, $5. Everything must go. End of the day.
So to free up cash, they've been selling quite a lot of their assets, including selling offices to rent them back again, which is obviously quite a backwards move, unless you're planning to either downsize, or you really need that cash for something, or, for the third reason, because you're trying to make the business look better and last a little bit longer to either sell it or liquidate it. I think it's very important to see what the business is doing with that cash. If all it's going to do is pay off debt and it's not reinvesting in the business, this could be some really big red flags for me. They have closed a lot of stores, which is probably mostly a really good thing. However, it does mean that they are losing a lot of their market share and customers. So overall, sales are going to go down. New inventory will go down. But hopefully they can make that balance from their online and from their customers going to their existing stores, which is what they're saying is happening. Then we have the new consoles, which is normally a complete boon for GameStop. But I'm actually more concerned about this being the final death knell for GameStop as the original concept store. Maybe the new concept may be a lot better off in this new world. So I'm not sure if you know, but both Sony and Microsoft have both announced that they will be launching 2 consoles each. One console for each of them would have no disk drive. The Xbox Series S will have no disk drive and will be $200 cheaper than the Xbox Series X, which will have a disk drive. The Xbox Series S, which will have no disk drive, will be $200 cheaper than the Xbox Series X, which will have a disk drive. The Xbox Series X will also be a higher specification and will work better on 4K TVs, whereas the Xbox Series S will be more suited for normal TVs. Now, it's more likely that if you're on a lower income, you're going to have more of a basic TV, and therefore the benefits of the Series X will probably not be as prevalent to you. So if you're on that lower income, you're probably going to end up buying the Series S because you'll have that trade-off of Do I spend an extra $200 to be able to buy cheaper second-hand games on disc? And the chances are, like I said, I don't think they will. I think they'll stay with the Series S and not have discs. People with more money may well buy the Series X, but I think the majority of them will end up downloading games. And the ones that do still continue to buy games, I think after a while the demand will not be there for the game sellers. So I don't know about you, but I know which one I would pick. Now, we don't know much about the price of the Sony consoles, but they've already said that in 2019, 53% of their game sales were digital. This has increased to 74% in 2020, which has been obviously boosted by the global pandemic. However, this shows that customers are very happy to own digital games. What's more, these games can now be kept in the digital library, and therefore if you owned the digital game for the PS4, if you buy the PS5, you can still play that game on the new console. This direct-to-consumer movement that long-term viewers will know is a big passion of mine is really going to help out Sony and Microsoft while massively hurting retailers like GameStop. Because not only now are the games now going direct to consumer, but Sony are also going to push the console more in the direction of their consumer models. I expect if Microsoft don't already do this, they will be soon. And as physical games become harder to come by, people will stop buying the disc consoles, which will stop retailers selling them as the demand will start to dry up. This will cause a cycle of lack of demand, causing lack of supply, causing lack of demand, and you can quite easily see that disc version of the console being completely written off after a few months. I think they had to announce a disc console for the old school fans that really care about it. But once they can justify that it will not hurt their business, they are going to drop it like a hot potato, which is going to really hit GameStop from the lack of physical games as well as consoles due to the direct-to-consumer model. But on top of this, you may also remember me talking about Nvidia making gaming on PC far more accessible and cost-effective, meaning that I think even the console demand is going to start to drop. So just generally, I don't think this is going to be a great Christmas for GameStop based on the new console. I am sure that they will have a good Christmas in comparison to the rest of the year, because they always do, but I suspect it won't be the big explosion that other people are expecting. Now, my final concern for this company, and to me this is the most important factor when considering investing in a business. When you invest in a company, you are investing in the management team. For me, I will only invest in a company where I believe the management team are focused on taking the company forward and making the company the biggest and best that it can be. From what I can tell with GameStop, we are talking about a very corrosive and toxic management team. There is a ton of online content saying about how bad GameStop is as an employer, how they treat their staff and how they treat their customers. I know that people that have been sacked from their job are not going to be great witnesses for the company. So I looked at the company itself to see how it played back to me. Firstly, the thing that jumped out to me was the dividend. The fact that this was so high made me think that this was being used to line the pockets of investors rather than growing the business. This shows a complete disregard for the business, and it's being used as a cash cow rather than the money being better in the business. I mean, a 10% dividend is excessive. Those funds could have been used better within the business. I looked at the way they treated their employees, and I remembered hearing that during the height of the global pandemic, that GameStop was trying to force its stores to stay open despite government-ordered shutdowns. Again, this shows a focus on pure profit rather than the best interest of the business. I looked at the investments that the business had made over the years, and it looks like what it has done is buy failing businesses and kind of let them limp along while making a few minor changes. I assume that they have probably treated them in the same way as the main business, and that it's just extort the businesses to take as much money as they can over the short term. There does not seem to be sufficient reinvestment in the business other than when it's been opening new stores. But again, it doesn't seem like they were trying to grow the company, but more just a greed thing. Now, you're probably saying, what are you talking about? The whole point of a business is that it makes money, right? But no, a business needs to make money now, yes. But as an investor, I want a business that's still going to be standing in 10 to 20 years and will be much stronger. That is how I know my investment is safe. If a business is not looking after its staff and its customers and the company itself, it's a really sad time for the company, and it will eventually go down the toilet. When I look at GameStop, I see a company that does not need to treat its customers well. Because the customers that shop at GameStop are often customers who have little choice. They don't have much money, and this is a quick and easy way for them to get some money from stuff that they have. It's also cheaper for them to get their items from GameStop because it's second hand. This means that the company can treat them poorly, give them a bad deal, as long as it's better than any other deal that they would get, and they will keep coming back. Because of this, it means that they don't have to have great staff. So it doesn't matter if they keep them happy and treat them well. In fact, if they've been with a company for too long and they've been paying them too much, this could be a great time to get rid of them and replace them with cheaper staff. Which is something that from the YouTube videos and the interviews, that's what they do seem to do. So for many years, you've had a business that has not needed to look after its customers or its staff. It is not needed to invest in the stores to make them more appealing or reinvent the wheel. So instead, it has grown a culture of money grabbing and penny pinching, which is really toxic. For this business to create a social and cultural hub of gaming within each GameStop store, which is their mission at the moment, I think they would need to fully, completely reinvent the business, which I just don't see happening. I also think that if the new concept store had been a roaring success, they would be shouting about it in their market updates and pushing it out to all stores much faster. What I actually see happening is this business downsizing its retail footprint massively, expanding its online offerings, and probably going private. This is a company that doesn't need some big board of directors or some huge management team. It just needs to be the simple business that it is. And for that reason, I'm not going to be investing in this company. It may well still exist in 10 years' time, but I doubt it. I don't like the way the company is run. I don't think they have a reasonable vision for what a company can achieve. And really, I think Cohen would have been better investing his money in a new startup to create this gaming hub. Trying to create it from this company seems like a really bad idea. Maybe you're a gamer and you disagree with me. Maybe you could see people going into GameStop or feeling like GameStop is part of your community. As a gamer myself, I can tell you that I don't think this is possible. Firstly, a group of mostly guys that would rather stay at home and play computer games rather than go to a shop is not a great place to start. But then there's also the fact that the gaming community is fractured into millions of different communities. It's not like it's one big group of people that you can just bring together. It makes me wonder if Cohen is a gamer himself, or even if any of the board of directors play computer games. But anyway, that's my 2 cents on GameStop. And that is why, in my opinion, you should avoid this stock like a rat with the plague. So what do you think? Are you still planning to hold this for the short term? Do you think an investment would be a good idea? I've also included in my outro a playlist which has other videos from other investors on YouTube that have different views to me, as well as some other interesting GameStop related content. Check them out to get a really balanced view of the stock and not just my opinion. Thanks for watching, and I'll see you in my next video.